All right, Ken Range Theory Trader back with you with an exciting series I'm starting. It's called the Specialist Series. This is part one. We're going to focus on Euro New Zealand and Pound New Zealand. So let's not waste time and get right into it. The premise is very simple. If you focus on one to two pairs with the same quote, which is the second currency in the pair, in this case, it's going to be New Zealand, and study their behavior and their movements, it can be an effective tool for trading success. Now, I'm not trying to suggest that these pairs move in tandem or together 100% of the time. That is not what I'm saying. Sometimes it happens, but sometimes it does not. Let me be clear on that. Okay, that's my disclaimer. Okay, so let's keep going. The setups that I trade, I focus typically on candle three. So I've traded at like 1 a.m. All these times are Eastern. The 1 a.m. candle three in the candle range theory pattern, the 9 a.m. candle three in the candle range theory pattern, daily long candle threes, daily short candle threes based on the daily candle range theory, and a candle two retrace on the daily or the 8 hour, more so the daily. And I'm going to explain the candle two retrace in detail. I don't think I have a video on that, but I will explain it in this one. So here we go. The dates. This is just going to be a week at a glance back test. This is January 12th through the 16th for the year 2026. So first off, let's take a look at Euro New Zealand on the daily chart. So this is the daily chart. I did have to include the Thursday and Friday before it because that was the makeup of the daily candle range theory. So these two green candles on the far left, I hope you can see my mouse. One, two, that's the Thursday and Friday of the prior week. Okay, so Friday set up Monday. So we're going to act like, okay, we're only trading Monday through Friday. This is how a week could look. They will not all look like this. This is just a sample example. All right. So if you were only trading or focusing on the daily chart for Euro New Zealand, Monday would have been a red candle three. After this candle two here, candle three here, just a straight drop. Tuesday would have been a retrace to candle two's level. Let me explain what candle two is briefly. The candle two retrace is what I call it. Candle two is what some people call a peak formation or a swing high, so it sets like the trend, you could say. So as long as the high of candle two holds, and okay, the way I read it, if candle three, this third candle, if this candle has not been closed below, then in my mind, the quote unquote trend is still short. Okay, the trend is short until this high gets taken out. Now, that doesn't mean you're going to get a short immediately. It just means that I believe that I have more of an odds or get a bigger move on a short than a long. Okay, so that's just how I read price action. Okay, so again, as long as the high or low of candle two holds, in this case, it's the high of candle two is holding, then my bias is short until candle three gets closed below. Once candle three gets closed below down here, then you're kind of in the Wild West. You kind of have to wait and see. It could continue to the downside, but it could see sharper pullbacks. But I'm not really going to get into that here. All right, so Tuesday was the pullback. Let me go back. Okay, Tuesday was the pullback. This is Wednesday, this is Thursday, and this is Friday. All right, so Thursday and Friday just continue short. Okay, so this is Monday, Tuesday, Wednesday, Thursday, Friday. Okay, so the best short trades would have been Monday for a candle three, and Wednesday because it was at 50% of candle two. So every time I see a candle two on the daily chart, I draw a fib and I watch 50% of it. And if price gets close enough to 50%, then I start looking for a possible entry using the chain and state delivery model that I mentioned on other videos. Okay, so that's that. Let's keep going. So let's take a look at the 5-minute chart. This is where we take our entry. So this is Monday on the 5-minute chart. This is this right here. This big red candle is this on the 5-minute. So on the daily chart, while you can't get big moves, you can see a ton of consolidation. So in this case, though, you see price consolidated most of the day. Your best entry, most of the start of the day at least, this is the daily open right here. There was nothing going on. The chain and state of delivery did eventually come at the high of the day, and then price closed below it, gave a little retrace, and then tanked for the rest of the day. So that was between 4:30 and 5 a.m. would have been your best entry to go short on this candle three setup. All right, so that was that. For Wednesday, okay, so this is the Wednesday retrace. This is very ugly price action. As you can see, price is just bouncing around in the range. The best entry would have been at 8, I think it was at 8:30 or 8:20 a.m. Eastern Standard. This purple line up here is 50% of candle 2. So let me go back so we can refresh our memory. This purple line right here is 50% of candle 2. This is candle 2 right here. So when Wednesday, this red candle right here went right near the 50%, and it's also at the weekly open. I do pay attention to the weekly open price. Sometimes price reacts off of that level very strongly. Then it can tank. You did get a second try on Thursday. As you can see, Thursday open, it came all the way back up and then tanked as well. But I'm just focusing on Wednesday. So, but you had two chances to go short. There's one, and that's two. Okay, so I'm just focusing on Wednesday. So again, Wednesday was kind of it was a consolidation day. Again, this is Wednesday. I just played it off the high of the day. Once the high of the day came and price closed below the candle that gave the high of the day, it changed state of delivery. That would have been a good entry, and then you just hold it. All right, so it did retrace, but that was it. So the daily chart results, if you would have traded on Monday, you could have got 97 pips. And then there were 97 pips up for grab. That doesn't mean you could get all 97. Maybe 50 out of it, maybe 30, maybe 40, whatever. Wednesday through Friday, you could have got 126 pips short. So maybe you could have got 70, 80, whatever. All right. But that was up for you. You had two chances to get some decent moves to the downside just using the daily chart. Now let's look at the 8-hour chart because I trade the daily and the 8-hour. So there was really only one good trade that I saw, which was an imperfect CRT. If you don't know what I mean when I say an imperfect CRT, I'll explain that now. All I look for is this. I look for two candles of the same color, and sometimes candle 2 does not close inside the range of candle 1, but the low of candle 2 in this case holds, right? So you got 1, 2 right here, and then this pullback right here. So this is the candle I would trade, but I only try to trade it for one candle because sometimes these can be counter trend trades. So you have to be real careful of them. But in this case, it did give an imperfect candle range theory. That's why I call it that. It's imperfect because it doesn't close inside of candle 1's range. So this is the first candle, second candle, and then this candle right here. So 1 a.m. gave the straight rise. This was 9 a.m. red candle the prior day. This was the 5 o'clock or 1700 candle. Okay, so this 1700 created the low of the day. It held. So at 1 a.m., that would have been a good trading opportunity to go long. And that's it. Okay, so that's it. Now, was there an opportunity to go short up here? Yes, but I do not like all this consolidation right here. Okay, this is again on the 8-hour. So it's the same thing that we saw on the daily chart. This is just a different way of looking at it. But this candle range theory high did hold, but sometimes you'll see where a price just doesn't do much for hours and hours and then eventually falls. So I don't try to trade this or anticipate that. It's just this was to me the best setup. So this one right here. So let's take a look at this 1 a.m. straight rise off of this imperfect CRT. So this 5-minute candle right here, 5-minute chart right here is this candle right here. This one candle. This is at 1 a.m. London or early, late Asia, early London. The best entry would have been at 115. I'm just looking for a candle 3 behavior, and we get that because price went a little bit below the 1 a.m. open and then just gave a straight rise. You would have got about 64 pips out of that. So the best, trade for that, like I said, would have been about one trade for 65 pips. That's my opinion. So there you go. Now let's look at pound New Zealand. Okay, so this is the daily chart. And it looked very similar to how Euro New Zealand did, except it actually gave us two candle range theories to the downside. I thought that was very interesting. So you have your range candle, your candle 1, 2, and 3 on the daily. This was the prior week. So this is Thursday and Friday of the prior week, just like Euro New Zealand gave us. So Monday gave us a candle 3 to the short. Tuesday retraced, but then this Tuesday created another range candle. So you have candle 1, candle 2 right here, and candle 3. So you'll see this red line here illustrates 1, 2, 3, and this line here illustrates 1, 2, 3. So I hope that's not confusing. Just know that we're trading this red candle and this red candle, and that's it. All right, because the high of this candle 2 held. And remember what I said, if the high of the candle 2 holds, my bias is to the downside. So I wouldn't be, you can get this. I think this was an 8-hour. They pretty much played out the same. But my strongest inclination, if you want to say a quote unquote trend for the daily chart, I would say is short because this candle 2 high is holding, right? Okay, but you will still get pullbacks. But again, another CRT, that was a very powerful pattern. So let's scale down and look at the couple of the 5-minute charts here. So Monday's short, this trade right here was basically the same as Euro New Zealand, just a straight drop. So I'm going to show you Thursday's short, which is right here. This was Thursday, this was Friday. Okay, so you have this red candle Monday, Tuesday, Wednesday did nothing, Thursday, Friday. So now we're going to look at Thursday right here. So let's go. Thursday gave a ton of consolidation from 10:30 p.m. to 4:05 a.m. You had all night to sit through this and get in or whatever. Remember, we do like to trade inside the candle range theory low. So anywhere really in here would have been fine. And then you just take the straight drop. This was a 100 pip drop. But they remember the daily chart, because it's such a high time frame on 5 minute chart, it's going to take a while. Okay, it can take a while to play out. But when you get the move can be huge. And then, so the daily chart, again, it had two trades, two candle threes. One trade went for 66 pips and the other went for 102 pips. Remember, this was this one and this one. Now, there is a continuation trade here, but I'll talk about, I don't trade that, but I'll explain that in a little bit at the end of the video. So let's see. Let's take a look at pound New Zealand for the 8-hour chart. This one gave a cleaner CRT to the upside. Now, it also has a basic candle range theory. It gave a 951. You'll see here, low, lower, low, higher, low. Okay, same on the 8-hour chart. So this would have been the 1 a.m., just a retrace right there. So that would have been good for a long example. So it's basically the same thing that Euro New Zealand did. So now what I'm going to do is just demonstrate for you. This is a cleaner candle range theory. This is a 951 to the downside. So this was 9 a.m., this red candle, 5 or 1700. And then at 1 a.m., okay, price dropped like a rock. So let's take a look at this 1 a.m. short. This is a clean CRT without all that consolidation. So remember, this right here, see all this consolidation off of this candle range theory high? But this right here is what I prefer. Okay, candle 1, candle 2, pokes above, closes inside, candle 3, straight drop. That's what I like, not all that consolidation. So let's take a look. So once again, you had a very long time to get in here between 10:40 p.m. the prior day and then 4 a.m. All this was just consolidation. Eventually, the move did come and then broke out of the range as well. So this 5-minute chart right here is this 8-hour candle right here. Okay. So that's all that is. So that, again, that was on the 8-hour chart. And it did overlap because that was a Thursday, okay, at 1 a.m. All right, so that was that. So the result for the 8-hour chart, you had one opportunity for 74 pips and another one for 158 pips short if you would have held all the way through. So 8, 16, 24. If you would have held the day, you could have got all that downside. So in conclusion, let's take a look at the week at a glance. If you were only trading these two pairs, and I feel a sneeze coming on, so if I sneeze, pardon me. So Monday, you had a candle 3 short on the daily. Let's go across for your New Zealand. Now, if you were trading the daily chart Monday, you had a short example for candle 3. Tuesday, on the 8-hour chart, you had a long, imperfect CRT to the long side. Wednesday, you could have went short. Thursday, you could have let the profit ride. There was another retrace that did give you a second opportunity to get in short as well. And then Friday, you had an optional CRT breakout or just let the profit ride. Let me explain the breakout real quick. I don't trade them, but if you want to be availed to them or just know what they are, here it is. When you have a candle range theory pattern and you have candle 1, candle 2, and candle 3, if candle 3 closes below candle 2, the candle 2 is low, right? This is the low of candle 2 right here. You can try to get a continuation. I'm not good at that because sometimes it'll retrace, sometimes it'll straight drop. It's a little too erratic for me. I like this price action more than this. Can this work? Yes, you see it working right now. Does it work 100% of the time? No. I haven't had good success with trading breakouts or continuations for candle 4 because you can say 1, 2, 3, 4. But it did play out on both this pair and this pair on the daily. Okay, you got candle 1. Or actually, you know what? Candle 1, 2, 1, 2, 3. This is candle 3. This is the low of candle 3 right here. And then eventually it did get closed below down here. But as long as candle 3's low doesn't get closed below, like I said, candle 2's high holds. Candle 3's low hasn't been closed below. It did get rated, but didn't get closed below. You just look for its price to possibly close below it. Okay, so this is kind of like, it's a little tricky to explain, but like, this isn't exactly a candle, a CRT. It's like 1, 2. I'm not sure if this high rated this high, but they're very similar. See how this candle here closed below this candle? So then you just look for a continuation here. Because of the close of this one, you just think, okay, price it might be apt to keep going because it closed below this one right here. And then it did the same thing here on the daily. And I hope I'm not confusing you, but yeah, right here. See how this closed below this, but this is a cleaner CRT. So because of the strength of this close, you can look for a continuation to the downside. Okay, so how this candle closes determine how your bias for the next day is my point. But it's not 100%. Matter of fact, here's an example right here. See how you got 1, 2, 3, and see how this close is below this one? Everybody who went short, though, got killed. It came right back. So that's what I'm talking about when I say it doesn't always work. It worked later. It just didn't work when you wanted it to. This was a better example right here. So I'm not really big on trying to get candle 4 continuations. If I could call it something, it'll be that candle 4 continuations after the 3 candle CRT. But it is an option because you did get one here. 1, 2, 3, 4. And so that's that. But let's wrap up the week. All right. So this is how your week would have looked. Like I said, the Monday, Tuesday, Wednesday, and then the Friday could have given the candle 4 continuation. And then for pound New Zealand, you gave a candle 3 daily. 8-hour chart gave a trade. No trade on Wednesday. There were 2 on Thursday. You could have taken the daily candle 3 short or the 951 8-hour short, either one. And then you could have looked for a candle 3 or so candle 4 continuation on the daily on Friday. So that's it. That's New Zealand. This is 1 week at a glance. Will all these weeks look like this? No. But like I said, if you trade the same quote, you can be a specialist on just Euro New Zealand and Pound New Zealand. Forget everything else. And there was plenty of action this week. If there were a downside, if I could think of one, sometimes the chart may not be as clean. You might be stuck in consolidation and you might not have as many trading opportunities as this week gave. So don't expect every week to pay you thousands of pips. That's not like that. But I hope this helps. It'll narrow your focus, know your setups, what you're trading, and be beneficial to you. So I appreciate your time and attention. Thanks for watching. Have a great day. Take care.